Can we get a V-shaped recovery on TLT this holiday season? The poor buckle under inflation as the rich people spend. Even if the Fed achieve a soft landing, it won't be smooth for everyone. The rich won't spend for everyone. That is why they are staying rich. Disinflation is already hurting the middle class based on the muted Black Friday sale. So it won't be a soft landing. Deflation is coming. The bond market seems to agree. TLT has been moving up after forming a double bottom. Stocks are starting to fall. Could we get a V-shaped recovery on TLT this holiday season? Will the Fed pivot before 2023? I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here. And you know what to do, and push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want it to be real. You want it to be true. You need to be my client, don't you? November has been busier than expected at the Langham Hotel in Boston as luxury travelers book rooms in plush suites and hold meetings in gilded conference rooms. The $135 per adult Thanksgiving brunch at its in-house restaurant sold out weeks ago. Across town in Dorchester, demand has been booming for a different kind of food service. Catholic Charities is seeing so many families at its free pantry. Beth, VP of Basic Needs at Catholic Charities Boston, has had to close early and tell patrons to come back in the morning. On the frigid Saturday morning before Thanksgiving, patrons waiting for free turkeys began to line the street at 4:30 a.m., more than 4 hours before the pantry opened. The contrast illustrates a divide that is rippling through America's topsy-turvy economy nearly 3 years into the lockdown. Many well-off consumers are still flush with cash and faring well financially, bolstering luxury brands and keeping high-end retailers and travel companies optimistic about the holiday season. Meanwhile, America's poor are running low on cash buffers, struggling to keep up with rising prices and facing climbing borrowing costs if they use credit cards or loans to make ends meet. The situation underlines a grim reality of the lockdown. The Fed is raising interest rates to make borrowing more expensive and temper demand, hoping to cool the economy and bring the fastest inflation in decades back down. But the adjustment period is already a painful one for many Americans, evidence that even if the central bank can pull off a soft landing, it won't feel benign to everyone. Many working class households fared well in 2020 and 2021. But after 18 months of rapid price inflation, some of which was driven by stimulus-fueled demand, the poor are depleting those cushions. American families are still sitting on about $1.7 trillion in extra savings accumulated during the lockdown by the middle of this year, based on Fed estimates. But about $1.35 trillion of it was held by the top half of earners and just $350 billion in the bottom half. At the same time, prices climbed 7.7% in the year through October, far faster than the roughly 2% norm before 2020, as savings have run down and necessities like car repair, food, and housing become sharply more expensive. Many people in lower income neighborhoods have begun turning to credit cards to sustain their spending. Balances for that group are now above 2019 levels. New York Fed research shows, with the cost of food, the explosive cost of eggs, people are having to come to us more, said the Beth of Catholic Charities, explaining that other rising prices, including rent, are intensifying the struggle. The location planned to give out 1,000 turkeys and 600 gift cards for turkeys at its holiday distribution. Tina, 42, was among those who lined up to get a turkey on Saturday. A mother of 7, she works full-time caring for residents at a group home. But it isn't enough to make ends meet for her and her family, especially after her Dorchester rent jumped last month to $2,500 from $2,000. It is going to be really difficult, she said. The process of disinflation is also hurting for lower income people. Fed policies work partly by making it expensive to borrow to sustain consumption, which causes demand to decline and eventually forces sellers to charge less. Rate increases also slow down the labor market, cooling wage growth and possibly even costing jobs. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. Jay Powell said, "These are the unfortunate cost of reducing inflation." Central bankers believe that a measure of pain today is better than what would happen if inflation were allowed to continue unchecked. If people and businesses begin to expect rapid price increases and act accordingly, asking for big raises, instituting frequent and large price increases, inflation could become entrenched in the economy. It would then take a more punishing policy response to bring it to heel, one that could push unemployment even higher. Evidence accumulating across the economy underscores that the slowdown the Fed has been engineering, however necessary, is likely to feel different across different income groups. Consumer spending overall has so far been resilient to the Fed's rate moves. Retail sales data moderated notably early in the year, but have recently picked back up. Personal consumption expenditures are expanding at a breakneck pace, but they continue to grow. Yet underneath those aggregate numbers, a nascent shift appears to be underway, one that highlights the growing divide in economic comfort between the rich and the poor. Credit card data from Bank of America suggest that high and middle income households have replaced lower income households in driving consumption growth in recent months. Poorer shoppers contributed 1/5 of the growth in discretionary spending in October, compared with around 2/5 a year earlier. This is likely due to lower income groups being the most negatively impacted by surging prices. They have also seen the biggest drawdown of bank savings. Economist at the Bank of America said, even if the poor feel the squeeze of elevated prices and higher interest rates and pullback, the economic health among richer consumers could keep demand strong in areas where wealthier people tend to spend their money, including services like travel and hotels. At the Langham, a newly renovated hotel in a century-old building that originally served as the Federal Reserve Bank of Boston, There is little to suggest an impending slowdown in spending. In the Fed, the hotel bar named in a nod to the building's heritage, bartenders are busy every weeknight, slinging cocktails with names like Trust Fund Baby and Apple Butter Me Up, both at $16. When guests come back from shopping on nearby Newberry Street, the hotel's managing director, Michelle, said their arms are full of bags. He sees the fact that the Thanksgiving brunch sold out so fast as emblematic of continued demand. If people were pulling back, we'd still be promoting, he said, of the 3-course family-style meal. Instead, we've got a waiting list. The consumption divide playing out in Boston is also clear at a national level, echoing through corporate earnings calls. American Express added customers for platinum and gold cards at a record clip in the United States last quarter. For instance, as it reported, great demand for premium fee-based products. As we sit here today, we see no changes in the spending behaviors of our customers. Stephen, the company's CEO, told investors during an earnings call last month. Companies that serve more low-income consumers, however, are reporting a marked pullback. Many consumers this year have relied on borrowing or dipping into their savings to manage their weekly. Brian, CEO of Target, said in an earnings call on November 16th. But for many consumers, those options are starting to run out. As a result, our guests are exhibiting increasing price sensitivity, becoming more focused on and responsive to promotions and more hesitant to purchase at full price. The split makes it hard to guess what will happen next with some spending and inflation. Some economists think the return of price sensitivity among lower income consumers will be enough to help overall moderate, paving the way for a notable slowdown in 2023. You get more promotional activity and companies start to compete for market share. But even if the poor are struggling, it may not be sufficient to bring spending and prices down meaningfully. As the world waits to see if the Fed can slow down the economy enough to control inflation without forcing the country into a recession, those coming to Catholic Charities illustrate why the stakes are so high. So can we get a Fed pivot this year? Anything is possible, but I don't think we will. As for TLT's V-shaped recovery, it will take a scary event to get there fast. Okay, now I'm going to show you my clients David Vine and Jema's book, Ignite the Passion, Co-Create Your Dreams. This is an awesome book. And my client Teddy Easy's book, Wicked Pussy Perfume. It is an erotic novel, such an amazing book. And my book, Treasures Within Our Heart. You are such a good boy for watching my video right till the end. Bye.